So, in 2026, while the rest of the crypto market has been kind of sleepy, one project just exploded onto the scene and got everyone talking. River. We're going to unpack the whole story, the wild growth, the really cool tech, and of course, the big money players pulling the strings. Let's dive in.
Okay, it all kicks off with this absolutely insane number, a 1,200% increase. I mean, think about that. In a market where most coins are struggling, what on earth could make something go this parabolic? This is way more than just a random pump. It's a full-blown phenomenon.
And this quote just hits the nail on the head, right? While everything else was treading water, River came out of nowhere with serious momentum. So, the big question we're going to answer in this explainer is, why? What is actually going on behind all this hype?
To figure that out, we first have to get a sense of just how big this river phenomenon really is. We need to look past the price chart and see what's actually happening under the hood.
And this right here is where things get truly wild. At its peak, River's trading volumes were rivaling the giants. We're talking Bitcoin and Ethereum levels of activity. That tells you straight up, this is not some small niche token. This thing is attracting huge attention from everyone.
All right, but a price surge like this can't just be hype forever. There has to be a real product, right? And it turns out River is trying to solve one of the single biggest headaches in all of decentralized finance, or DeFi. So here's the problem in a nutshell. In DeFi, your money gets stuck. Your collateral on Ethereum can't easily be used over on TRON or some other network. It's kind of like having money in a bunch of different banks that refuse to talk to each other. It's a huge pain. River's answer to this is something they call an omni-CDP. Now, the magic words here are without a bridge. This is a system built to let your assets move freely between chains, completely cutting out the need for those crypto bridges, which, as you know, have become infamous targets for massive multi-million-dollar hacks. And for you, the user, it's actually pretty simple. You just deposit your collateral, say some Ethereum, on the Ethereum network. Then, poof, you can mint River's stablecoin, satUSD, on a totally different chain where you need to use it. The key takeaway, you've just moved value across blockchains without ever putting your funds on a risky bridge. It's a game changer. Now, this project is more than just one piece of tech. The whole ecosystem has a few key moving parts. You've got the satUSD stablecoin, which is the workhorse for moving value. There's a yield-bearing version to earn some passive income. The River token itself is for governance and staking. And they even have a module to get the community more involved. But look, even the best tech in the world doesn't just magically cause a 1,200% price pump. That's where the next chapter of this story comes in, the money and the influence that turned a little spark into an absolute inferno. It really kicked off with a huge strategic investment. In 2026, TRON DAO Ventures came in and dropped a cool $8 million into the project. And this wasn't just them throwing money at it and walking away. No, this investment had a very clear purpose: to bring River's entire cross-chain system over to the TRON network. We're talking deploying satUSD, getting it into liquidity pools, and building out new DeFi products. This was all about driving actual, real-world usage. So if the TRON investment was the fuel, this was the match. When Arthur Hayes, one of the biggest and most watched personalities in all of crypto, publicly announced he was in, the market just went into an absolute frenzy. I mean, this chart says everything you need to know. You can draw a perfectly straight line from his endorsement to that massive price surge we saw at the beginning. It's a textbook case of just how powerful influencer capital is in this space. So, great tech, powerful backers, case closed, right? Time to buy? Well, not so fast. Whenever you see this much hype, you absolutely have to flip the coin over and look at the very real risks that are hiding behind these incredible returns. And this right here reveals a super important detail. Only about 20% of all River tokens are actually out there trading on the market. The other 80%, and that is a massive chunk, is being held by the team, by early investors, and in the project's treasury. And that leads us to the next logical point. Those tokens aren't locked up forever. They get released on a schedule. Just in January 2026, for example, another 1.5 million tokens are set to hit the market. Every time one of these unlocks happens, it creates a whole lot of potential selling pressure that could easily drive the price down. You know, having so many tokens in just a few wallets creates some serious dangers. Any one of those large holders, a whale, could decide to sell and basically crash the price for everyone else. It's a recipe for some pretty extreme volatility. And it also means that a tiny group of insiders could have way too much say in how the project is governed. So where does all this leave us? Well, you can kind of see two very different paths forward for River. The bull case is simple. If more and more people start using satUSD and the integrations keep growing, the project could become a real DeFi staple. But the bear case is just as plausible. If the big holders start dumping, if user growth stalls out, or if regulators start cracking down, all this hype could disappear just as fast as it showed up.
And that really is the million-dollar question, isn't it? The tech is undeniably innovative, and the backers are as powerful as they come, but River's future really boils down to one thing. Can it turn all this speculative hype into real, sustainable, long-term value for the entire DeFi ecosystem? And that's our look at River. Now, just a reminder, none of this is financial advice. The crypto market is a wild place, so please always, always do your own research. Thanks for tuning in.